Welcome to the webinar on IHI project proposals on the financial section. So it is a complicated webinar, but luckily we do have a superstar financial officer who is going to give the presentation. Gael is here with us. We have Catherine here with the communications team, and we have the legal officers watching as well, who will be there to answer some more technical questions if needed. So just before we start, we are recording this webinar. It's going to be published on the website along with the slides. So you can actually go to the website now and see all the old webinars, including the rules and procedures, which we spent a long time going over. And any of the specific topics that you might be interested in, all the presentations and recordings are up as well. So if you've given us permission, we will go over and put the participant list on our website as well, so you can find who is interested in what topic. Now, for today's webinar, I will just say that this is the preparing proposal budget, and the calls should be launched this week, so look out for that. Get ready for that. But without more ado, I think it's time to go over to our presentation that everybody wants to hear. I'm looking forward to it as well. I will give it over to Gael. Gael?
Thank you, Tom. So welcome everyone to this webinar on the financial part of the IHI project proposals. So today I will try to explain you the most clearly as possible how the budget table is composed. So all elements that are composing the budget table, I will go through them. I will also explain you the different thresholds that you need to pay attention to, the different types of industry contribution that can be brought by private members and contributing partners, namely IKOP, financial contribution, and IKAA. And then I will provide you some concrete examples of budget tables, so you can see concretely how this works and what are the steps you need to follow to concretely build your budget table. And then we will still have some time to answer some of your questions. So let's start. First of all, when do you need to prepare a budget table? Actually, it is necessary for single stage proposals, but for two-stage calls in a short proposal, you don't need to have to prepare a budget table. You only need to specify the total requested EU contribution for the project. And then if you are successful and you go to the next phase, if you're invited to basically to prepare a full proposal, then for your full proposal, you also need to prepare a budget table. So this is how the budget table looks like in the submission environment. And I took all the columns again and put some colors, so you can see better the different parts of that budget table. So the first part relates to the estimated eligible cost in blue. The second part relates to the estimated EU contribution and the other sources of financing. And those two parts are applicable for all applicants. And the third part in purple are for the IHI specificities. So IKOP and non-EU IKOP, which are specific for private members and contributing partners, and then IKAA, which is only for private members. So I'll start with the first part of that budget table, and we'll go through all those columns in blue. So first of all, your total project eligible costs, they can be incurred by entities that are requesting funding only. So for instance, SMEs or non-profit companies or hospitals. So those entities will have their costs reimbursed. And so they will be covered basically by public funds mainly, meaning the cash we receive from the European Commission. So the project costs, they can also be incurred by entities that are not requesting funding, but that are contributing in-kind contribution. So we say IKOP. And they can also provide potentially cash to the projects. So those costs are not reimbursed, and those are covered by private funds, since they are incurred by private members and contributing partners. And you have the logos here of the associations that are our private members. So we have FPA, that also includes Vaccines Europe. We have MedTech Europe, COSIR, and Europa Bio as private members. And then there is a third type of entity that can incur project eligible costs, and we call them the hybrid participants. So basically, they can contribute in-kind contribution and or cash to the project, but they can also request funding. So those are also private members and contributing partners. So that's a bit a specificity of IHI. And as you can see here, the project eligible costs are basically covered by both public and private funds. So this is the specificity of a public-private partnership, since IHI is a PPP, and so we have this co-funding principle. And then there is this strange animal as well, the IKAA, that are not project eligible costs, so that's why they are aside. And so those not project eligible costs, they can be incurred by private members only. And I will talk about IKAA a bit later. Now we will concentrate on the project eligible costs. So you can have different types of cost categories, personnel, subcontracting, indirect cost, and so on. What is important is that all your costs, they must fulfill the cost eligibility criteria. So they have to be real, they have to be actual, so not estimated. They have to be recorded in your accounts, foreseen in the budget, necessary for the action. They should be documented, since they may be auditable at some point. They need to be incurred during the project duration, and so on. So I invite you to have a look at the Article 6 of the Model Grant Agreement to see the whole list of cost eligibility criteria. And why it's so important is because only eligible costs can be reimbursed or be considered as IKOP. So it's really important to check those criteria. So I'll start with the personal costs, first cost category. So you could have cost for your employees, you could have cost for natural persons that have a direct contract, but which is not an employment contract, for instance, in-house consultants. You could have seconded personnel. So that's basically when you have a person in your team employed and paid by a third party external to the project, but put at the disposal of your company against some payments. So just an example, if you have a professor at university paid by the university, but still it can be put, that professor could be put at the disposal of a research center, for instance, for working in that company. And then the research organization would pay back the third party and would charge those costs on the project. And then you could also have some cost for the work of SME owners or natural person that are not receiving a salary. So if I take the most common case, so your cost for employees, you have two options. Either you use actual costs, and so for calculating the actual personal cost of that person, you need to multiply the daily rate for that person by the number of days that will be worked on the action, and you have a maximum of 215 days per year for a person working full time. So of course you need to calculate the pro rata in case it's not a full-time person. To get the daily rate for that person, you need to divide the actual annual personal costs for that person by 215 days. Again, pro rata in case it's less than 1 year. And so a second option is to use average personal costs in case it's your usual cost accounting practices. And I put here a very useful link. It's an easy presentation on all the different calculation methods for personal costs. I found it personally very useful, so I invite you to have a look at that presentation because it explains very well in detail with concrete examples how you can calculate your personal costs. So subcontracting costs, that's when you have a third party that carries out part of the work on project tasks for the beneficiary. In that case, you need to have a contract between the beneficiary and the subcontractor. Then for the selection of the subcontractor, it's important that the beneficiary follows its own usual practice. of course, you need to ensure that there is no conflict of interest, that the process is transparent, and you need to ensure the best value for money or the lowest price if it's appropriate. And one more point on subcontracting cost. No subcontracting is allowed between the beneficiaries of the same project. A third type of cost, purchase costs. So you can have travel, accommodation, equipment, for instance, the depreciation of cost. To calculate that, you need to make sure that you just charge the cost of equipment, that the part of the cost that has been used for the project itself. Then you can also have other goods, works, or services in case it's necessary to implement the project. And normally it's quite limited in scope, so it's not to implement project tasks. In case the contract is to implement project tasks, then it will be more considered as a subcontracting cost. Internally invoiced goods and services, that's when goods or services that the beneficiary itself produces or provides to be directly used for the action. So for instance, if you have a self-produced consumable, or if the beneficiary has some devices or facilities that can be put at the disposal of the project. And this specific cost category needs to be calculated as unit cost following the usual cost accounting practices of the beneficiary. Then the indirect costs, it's calculated automatically by the tool as a fixed flat rate of 25% of the direct eligible costs. And in the calculation, you need to exclude the subcontracting cost and the internally invoiced goods and services in case you have any. So as I said, it's automatic for all beneficiaries, so also for the companies that are providing IKOP. That's a major difference compared to what we had under IMI 2 program. So it's important here that the indirect costs are not included in any other cost categories in the budget table to make sure there is no double counting, since the indirect cost flat rate is automatic. So in case you have, for instance, a company that uses average personnel cost, and the normal practice is to include the indirect cost in the flat rate, well, that rate will need to be recalculated to make sure that indirect costs are excluded from the calculation and there is no double counting. So I'll pass to the second part of the budget table now, which is on the estimated EU contribution and other sources of financing, which is also applicable for all applicants. And so in this part, basically, I will answer this question: how are participants' costs covered? Well, basically, they can be reimbursed by IHI. So you need to request EU contribution for that. They can be covered by own resources, the own resources of the beneficiary, or they can be covered by financial contributions received other than the one received from IHI. So for instance, the financial contribution that you may receive from private members or contributing partners. So you can have several scenarios. Either you have only one source of financing. For instance, if you are only funded with IHI funding, or it can be a combination of the three or just two, or it can be none in case the entity is not eligible for funding, or in case the entity is, for instance, a private member and wants to maximize its IKOP. So in that case, it will request no reimbursement of their cost, and all the cost incurred will be IKOP provided to the project. So I'll start with the first source of financing, which is IHI funding, basically. So the funding rate is always 100%. It's automatic, and it's like this for all entities, even the ones that are not eligible for funding. The maximum EU contribution, it's also calculated automatically, and so it's the funding rate multiplied by the total eligible costs. Then the requested EU contribution, that's basically the amount of IHI funding that is requested by the beneficiary to reimburse a part or all of its project eligible costs. And that needs to be encoded manually in the budget table. So actually, we understand there is some confusion sometimes here with this 100% funding rate, because it gives actually the wrong impression that all participants can get all their costs reimbursed. But no, it's actually not the case, because we have some private members and contributing partners who should bring 45% contribution to the project. And also because we have some participants that will not be eligible for funding. So no, not all participants can get their cost reimbursed, or at least not all their cost reimbursed. So to make it maybe a bit clearer, we have here a simplified budget table. So this is a scenario we could expect, for instance, in single stage call. We would have public partners who would request the full reimbursement of their costs. So like SMEs, universities, hospitals, we don't expect them to contribute any IKOP, IKAA, or whatever. They actually do not qualify for that. They're not private members. They're not contributing partners. They can just request funding, basically. So we expect them to request the full reimbursement of their costs. So in single stage call, you can also have private members requesting zero funding. So basically, they would provide the totality of their cost as contribution to the project. And then we can also have hybrid participants. So those ones would contribute and would also request funding. And you see that in the end, you have 20 million coming from public funds and 20 million coming from private funds. So you have a 50-50 balance. And in case of a two-stage call, so it's a bit less open two-stage call, and some entities are not eligible for funding. For instance, the pre-identified private members and contributing partners, or the large companies that have an annual turnover of more than 500 million, or the ones that are linked to such a big company are also not eligible for funding. So in this case, for two-stage call, we would also have public partners requesting the full reimbursement of their costs. So it doesn't change for public partners. It's the same as for single stage call. And but in two-stage call, the pre-identified private members and contributing partners, since they are not eligible for funding, we expect them to provide the whole, the totality of their cost as contribution to the project in terms of IKOP, financial contribution, and IKAA. Well, it can be just one of the contribution. It doesn't need to be the three. It can be just one or two, or it can be three. And you see that the balance between funding from public and from private is also reached in this scenario. So basically in your budget table, you may have, as I said, participants eligible for funding, can be public partners. Those one will request full reimbursement of their costs. Can be hybrid participants. Those one can request some funding, but they need to keep in mind that they have to contribute to the 45% contribution that needs to be reached. And they also need to keep in mind that the fact that they request funding will actually decrease the funding available for the other participants. And then you can also have participants not eligible for funding, and for those one, you really need to make sure that they do not request EU funding in the tool, because the tool actually allows it. It's not blocking them for requesting funding. So yeah, the tool is not so smart, so please be smarter than the tool, basically. So in the end, who gets what part of funding? That's really something to be discussed and agreed among the applicants. So I was talking about the cost covered by IHI funding, but cost can also be covered by financial contribution. So that's when a beneficiary expects to receive some money for the project other than from IHI. So it can be financial contribution received by private members or contributing partners. In this case, the beneficiary who is receiving the financial contribution must ensure that the part of the cost covered by that financial contribution are manually deducted from the requested EU contribution, because otherwise you have a double funding for those costs. They would be otherwise covered both by financial contribution from private members and from cash received by IHI. So you need really to make sure that the requested EU contribution is adapted here. And in your proposal, you will have in part B a table in which you will need to explain the different financial contributions that are provided and received. So namely, you will need to specify which private members, which contributing partners are paying what financial contribution, what is the amount, which beneficiary will receive it basically, and what will be the project activities that will need to be carried out with that financial contribution received. And then cost can also be covered by own resources. So basically when the participant expects to use its own resources to implement the project, it is actually when the total project costs are not entirely covered by EU contribution or financial contribution or both. And for private members and contributing partners, it's always zero because their own resources is considered IKOP. And here you can see a simple example of the different sources of financing. So for instance, for public, when you have public partners and they have 20 million eligible costs, they can request 10 million from IHI, then 5 from as covered by financial contribution received by a private member, and 5 million can also be covered by the participant itself. So what you need to check here when it is the case, when you have different sources of financing, you need to check that all the costs are covered, but that there is no profit basically. So I refer to the fact that the financial contribution needs to be deducted from the requested EU contribution. And so how to check that? Well, you need to have a balance between the total eligible costs and then all the columns in green here. The addition of the column in green should match with the total eligible costs. Now I'll start with the third part of the budget table, which relates to the IHI specificities. So IKOP, non-EU IKOP, and then IKAA, which is only for private members. The private members, so they are the funding members of IHI together with the European Commission. There are 4 industry trade associations. So you have FPA, that also includes Vaccines Europe. You have MedTech Europe, you have Europa Bio and COSIR. And here you see the different sectors they are representing and also the different missions they are having. And also the contributing partners, those are any organization that wants to contribute to the objectives of IHI, but without becoming a full member. So they can apply. To apply, they need to send a letter of endorsement to the IHI governing board, and in that letter, they need to commit a certain contribution to a certain topic. And this application, of course, needs to be approved by the IHI governing board. So what are the types of contribution private members and contributing partners can contribute to the project? So it can be IKOP, which stands for in-kind contribution to operational activities. And this consists basically of eligible costs incurred to implement the project, and it can include EU IKOP and non-EU IKOP. I will come to this a bit later on. Another contribution type is the financial contribution. So we've talked about this already. So basically the cash given to a project beneficiary from the same consortium to support the cost of that beneficiary to implement the project. And then IKAA, which stands for in-kind contribution to additional activities. I'll explain this a bit later on as well. So as you can see here, the private members, they can contribute all types of contribution, but the contributing partners, they can only contribute IKOP and financial contribution. Contributing partners, they cannot contribute IKAA. And when we refer to private members, we mean actually the private members, their constituent entities, and their affiliated entities. So by private member, we mean the industry associations like FPA, COSIR, MedTech. By constituent entity, we mean the members of those associations. And by affiliated entity, we mean the entity that have a legal link or a capital link with these associations or members of associations. And if you are not a private member, you cannot provide IKOP, IKAA, or financial contribution. So that's really important to keep in mind. And then there is one key threshold that's really important, and that concerns the private member and contributing partners. It is the minimum 45% industry threshold. So in the Single Basic Act, you have this sentence that says that private members, the constituent or affiliated entities and contributing partners, they must contribute at least 45% of the action's eligible cost and cost for its additional activities. So if you translate this sentence into a more or less simple formula, you will get this one: IKOP plus FC plus IKAA should be higher or equal than 45% of the action's eligible cost plus IKAA. And if that threshold is not reached collectively, the proposal or the full proposal will not be evaluated. So this is an eligibility criteria that is key. And it's so important that actually the coordinator of the proposal or the full proposal needs to submit a declaration, which is an annex to the proposal, to confirm actually that the required 45% contribution will be provided. So that annex needs to be submitted for single stage proposals and two-stage full proposals. Not for short proposals, since in short proposals the commitment is made at the core text level. The 45% threshold needs to be maintained during the whole project implementation. So that's important as well. In case you have a drop of IKOP, well, the industry needs to make sure that it is compensated by an increase of something else, financial contribution or IKAA. Also important point is that this 45% contribution threshold, it can be reached with only one or two contribution types. So it can be reached, for instance, only with IKOP. You don't need to have the 3 types of contribution in a project. And but you need to be a private member or a contributing partner to contribute to that threshold. And so before actually the grant agreement signature, IHI office will check if the private members are indeed members and if contributing partners have been approved by the IHI governing board. So I'll go a bit more in details now into the different types of contribution, and I'll start with IKOP. So as I said, it's only for private members and contributing partners. It consists of eligible costs incurred in implementing the project, so by those entities. And the companies that are providing IKOP, they are subject exactly to the same rights and obligation as any other beneficiary signing the grant agreement. So they have basically the same eligibility criteria, the same types of costs allowed, the same rules for reporting and so on. And IKOP is calculated like this. So you need to take the eligible costs for the action and then deduct the requested IHI funding for those costs. This calculation needs to be done manually in the budget table. Again, the tool is not so smart, so you need to really make the calculation yourself. And one more point regarding the budget table, in the column IKOP, you have actually all the types of IKOP. It can be EU IKOP, it can also be non-EU IKOP. So to give you an example here, for hybrid participants, out of the total eligible cost of 15 million, the requested funding is 5 million. So as a result, IKOP equals 10 million. And out of the 10 million, you have 2 million that are non-EU IKOP. So I'll explain you now what are non-EU IKOP. Non-EU IKOP are basically costs, eligible costs, so incurred for the project, but in a third countries outside the EU or outside one of the associated countries to Horizon Europe. So when we say outside the EU, we mean basically outside one of the 27 countries of the European Union. And when we say outside one of the third countries associated to Horizon Europe, we mean basically not in one of the associate countries which are listed here. So there are 13 countries that are associated currently. And there are also some countries for which there is an agreement ongoing. And for instance, for Switzerland and UK, there is currently no agreement reached yet. So this means that if at the time of the grant agreement signature, those countries are not officially associated countries, their IKOP will be considered non-EU. And so what's the criteria to know basically if it is EU or non-EU? It is the criteria is where the activity is carried out. So it does not really take into account where the company is established. So this means that if a company is based in the US, but the activities are carried out in Germany, it will be considered EU IKOP. And the other way around, if a company is based in Germany, but the activities are carried out in the US, it will be considered as non-EU IKOP. There is a maximum threshold to respect for non-EU. It cannot exceed 20% of total IKOP from private members and contributing partners at overall program level. And at project level, the limit for IHI call 1 and call 2 is set to 100% non-EU. So basically there is no limit. But as a best practice, in case you exceed the 20% at project level, it's good that the private members and the contributing partners liaise with the industry responsible office to ensure that there is a good monitoring at program levels. The financial contribution now, the second type of contribution. So we've touched upon this already a little bit, but maybe there is something else to add. So it is basically the cash that a private member or contributing partner would pay to another beneficiary from the same consortium to support the eligible cost of that beneficiary to implement the project. And in the budget table, you have actually no financial contribution paid to be filled in by the private members and the contributing partners. So as a result, the financial contribution paid will need to be specified in the budget of the beneficiary that is receiving it in the column financial contribution, as we've seen in slide 22, which we presented already. And so now I will tackle my favorite topic, IKAA, so in-kind contribution for additional activities. So what can be considered as additional activities? So you need to fulfill all the below conditions. The activity must contribute to the IHI-GU objectives and tasks. It must be set out in the IKAA plan that will need to be approved by the governing board, following the consultation of some advisory bodies, the SIP and the SRG, Science and Innovation Panel and Science and Representative Group. Thank you, Catherine. The activities, they should not be funded by the IHI-GU or any other union funding program. It should be carried out in the union or in one of the countries associated to Horizon Europe, so it cannot be non-EU. And then it can be of two types. It can be at program level or it can be project level. When it is at program level, it is when the activity contributes to the uptake of results from IHI or IMI2 or IMI1 projects, or it is when the additional activity has a significant added value for the union. So that's pretty broad. And at project level, that's when the activity contributes towards the achievement of the objectives of the IHI project, or when it contributes towards the dissemination, the sustainability, or the exploitation of the IHI project results. And again, it is only for private members, it is not for contributing partners. And what interests us today, it is the project-specific IKAA. There is also a threshold that IKAA should not exceed. It is 40% of the total IKOP and IKAA contribution from private members for the whole IHI program. And in this threshold at program level, it includes not only the project-specific IKAA, but also program-specific IKAA. And at project level, there is no formal limitation, but in case you have more than 40% IKAA at project level, it's good that the private member concerned liaise with the industry again to make sure that there is a good monitoring at program level. Regarding the eligibility time frame of project-specific IKAA, so the cost of additional activities for a project, they can incur already before the project starts. So from the submission of the proposal or the full proposal, and they can be incurred up to 2 years after the project has ended. So you can see on this graph that there is like an overlap between IKOP and project specific IKAA. And that's why it's really important to make to understand well the difference, because during the project duration, you may have both IKOP and project IKAA. So what's the difference? IKOP are eligible costs in implementing project tasks, as they are described in the description of the action. And IKAA are costs for additional activities that are not project tasks and therefore not IKOP. And it's up to the consortium to identify what is IKOP and what is IKAA for their respective projects. And IKOP, another difference here, IKOP are eligible costs, so they can be reimbursed by IHI, of course, if the private members and contributing partners are eligible for funding, while IKAA are not eligible costs. They are non-project costs, so they are not reimbursable by IHI. So to give you here a concrete example, it's a bit long, but I try to make it as explicit as possible. So imagine you have project objectives, which are to integrate diagnostic and predictive approaches to support multimodality cancer care. Then you would have IKOP, which would be project activities, and it could be, for instance, developing integrated solutions collaboratively in the consortium and also get feedback from end users to further improve the multimodality cancer care. So considering the project objectives and IKOP, what could be potential additional activities? So you could have additional activities starting already before the project starts. It could be, for instance, cost for developing an image-guided radiation therapy device, and the device will then be used for the consortium activities, and as a result will contribute to achieve the project objectives. Potential additional activity during the project implementation, it could be a cost for generating data from clinical trials using cancer treatments modalities, other than the ones of the project, which then are used as an independent data set. And then this data will further contribute to verifying the usability of the integrated approach developed by the project and would help its fine-tuning, but the project activities would not depend on this specific data set. Because if it really depends on it, then it means that it's absolutely essential and the activity should be considered as IKOP, not IKAA. The IKAA is really like an added value to the project, but it's not the project tasks, which is essential. And after the project ended, a potential additional activity, it could be costs for developing a decision-making software tool that enables easier communication in the cancer care and continuum and between stakeholders. And this tool would contribute to the deployment and the exploitation of the project output. So I hope it's a bit clearer for you, or maybe not. Hopefully it is. So the cost for additional activities, they should be calculated in according to the usual cost accounting practices of the private member. So in principle, they are not subject to the Horizon Europe's eligibility rules unless the entity requires it specifically and if it is justified. And IKAA can consist actually in of any types of cost as far as it is necessary to implement the additional activities. In terms of planning of those project-specific additional activities, so they should be specified in the IKAA plan, which is an annex to the proposal or the full proposal. You have here the instructions to fill in this annex, and you have also the link to the annex itself, actually. And everything is published on our IHI website. This needs to be filled in by private members only, if it's applicable, since some projects may be not have any IKAA. And then the annex on IKAA will be checked by proposal evaluators. So they will be briefed, of course, and what they will be checking, for instance, is that all the IKAA conditions are fulfilled. So the ones that we've gone through on slide 43. And in particular, they will have to check if the additional activity suggested in the annex do contribute to the project objectives, or to the dissemination, the sustainability, or the exploitation of the project results. They will check also if the additional activity are not project activities, so not IKOP, and if they are carried out in the EU or in the one of the associated countries to Horizon Europe. And I put you here the link to the IKAA guidelines as well, for your information. This is the annex on IKAA that needs to be filled in for your proposal or full proposal. So you can see you need to basically specify the company name, the category of the additional activity. You need to provide a description for each activity, an estimation also of the period when the activity should normally incur. You need to explain also the link to the projects and provide the total value of that additional activity. And some information are confidential, meaning that they will only be shared with the evaluators of the proposal and with the governing board and the IHI office. And some other information, the one in blue, or purple, will be public, meaning that they will be published in the work program of IHI and in the annual activity report. I've put some tables that are comparing IKOP and IKAA for your information, but I will not go through them right now. It's a bit too technical, but at least you can read them after this presentation, and you can see the differences. It's a summary, and it's also highlighting some of the differences we have between IHI and IMI 2 program, actually. And now we come to probably the most important part of this webinar, and probably you are expecting some concrete examples. So I will try to provide you two examples concretely. So I have one example for a single stage call proposal. Supposedly we have more or less 10 million as EU funding available for a targeted topic. And so it will need to be matched by private members and contributing partners for more or less the same amount. So here for simplification, we make 50-50, but okay, it's also a prudent approach. But we know, and you know now also, that it's the strict or the formal minimum contribution is actually 45% of the action's eligible cost and IKAA. But for the sake of simplification here, we just make half public funding, half private funding. So the first step in your single stage call proposal budget table is to calculate the contribution from the private members and contributing partners. And this total contribution was, as I said, should equal the EU funding available. So here in this case, 10 million. And you see that indeed, if you with the four members here, we have some hybrid participants, we have some private members providing only IKOP. In total, they indeed contribute in total that amount of 10 million. You see, you can notice also that number C, the contributing partner, has 0 as IKAA, since it's only IKAA is only applicable for private members. And then as a step 2, you need to calculate the remaining funding available for the public partners, because since it's a single stage call, it's pretty open. Private members and contributing partners are eligible for funding. And in this case, you see we have 3 participants that are hybrid, so they do request some reimbursement of their costs. In total, they request 4,500,000 euro as reimbursement of their costs. And so as a result, the remaining funding available is 6,333,000. And this funding remaining available is what is left basically for the public partners. So when you bring some public partners on board, you need to make sure that well, of course, the total requested contribution from all those new from those public partners, they need to request funding, but it should remain within the limit available, which is the 6,000,000.333 that we've just calculated, and we see that here it is the case. They request a reimbursement of their costs for that total amount of 6 million. You see also that large company Y is requesting funding because large companies are eligible in single stage call. And yes, also all those public partners, they are requesting 100% of their cost to be reimbursed. So now, fourth step is to make sure that you have reached the 45% industry contribution. So you take that formula, and the first thing is to calculate the action's eligible cost plus IKAA. So it gives here 21 million. Then you need to check what's the minimum required. So what is the 45%? So you multiply the 21 million by 45%, and you will get the minimum industry contribution that should be provided, and it is like 9 million point 7. And then you need to make sure that you are higher than that amount. And in this example, it is the case because you have the total industry contribution, IKOP plus FC plus IKAA, which is equal to 10 million, which is above the 45% threshold. So that's correct, that's acceptable. Sorry. What you need to check also is if your budget table is correctly balanced. So basically, are all your eligible costs covered by a source of financing? And so you need to do this by checking if the eligible costs are equal to the reimbursed cost plus the IKOP. And in the reimbursed costs, it includes the requested EU contribution, the own resources, and the financial contribution, so all the different sources of financing. And why you need to do this, it's to control that the financial contribution that has been received by public partners have correctly been deducted from the requested funding. So to ensure there is no profit, basically, and also to make sure that all the eligible costs are well covered by a source of financing. Then another check that needs to be done is for IKAA. So you need to make sure you do not exceed the 40%. Well, even though it's not dramatic since the threshold is mandatory at program level, but not at project level. But still, in case you exceed it at project level, it's good to inform your responsible office on industry sites to make sure they can manage the monitoring properly for at program level. But so here in this example, the IKAA equals 34% of the total of IKOP plus IKAA. So that's under the 40%. A second example for two-stage call this time. So in case you have a new funding available for the topic, which is 8 million, and again we take we assume it is 50-50 for simplification reason. So we want that amount to be matched by private members and contributing partners contribution. For your short proposal, as I said at the beginning, there is no budget table that needs to be prepared, just one total requested EU contribution that should be specified. So it would be the amount here, 8 million. Then if the short proposal is selected and ranked as first, you will be invited to start preparing the full proposal together with the pre-identified industry consortium. And then for the full proposal, all the contribution provided from private members and contributing partners will actually be dedicated to the funding of public partners, because the pre-identified private members and contributing partners are not eligible for funding. So obviously all funding goes to public partners. And also some entities are not eligible. So as I said, the pre-identified entities, but also the for-profit companies that have an annual turnover of more than 500 million, or that are linked to a company with such a high turnover per year. So we'll go through the same steps here. First, calculate the contribution from private members and contributing partners. So it needs, as I said, to be equal to the EU funding. And we see here that it is the case. And we see here also that the reimbursed costs of those pre-identified private members and contributing partners is equal to 0. So the full funding will go to public partners. Step 2, calculate the remaining funding available for the public partners. So we've seen this already. They have the full funding available for them. Then step 3, bring the public partners on board and make sure that the funding is shared among the different public partners and remaining within the limits available. And we see here in this example that the public partners that have been brought do request a total of 8 million. So it matches the available EU funding. And we see in this case that the large company X is not requesting funding, and it is because, as I said, they are not eligible for funding. You see in yellow also I highlighted the total contribution and the total reimbursed eligible costs, which are the same. So it shows that you have 50, well, the co-funding principle again, perfect balance here, even though it's not a criteria that is mandatory, and since the criteria is 45%, but here you have 50%. Then, so you need to check indeed that minimum 45% industry contribution, if it is reached, and in this case it is. So you take, again, it's the same calculation, the actions eligible cost plus IKAA. You get the sum of this, it gives 17 million. You calculate what is the minimum that should be provided as industry contribution. So you multiply the 17 million by 45%, which gives 7 million. And then you make sure that the total industry contribution is higher than that minimum threshold. And in this example, we reach 48%, which gives an acceptable proposal. Then checking again if your table is correctly balanced. So it's the same formula as example 1 again. make sure that the eligible costs are equal to the reimbursed cost plus IKOP. And it is the case, so you can make sure that all costs are covered by a source of financing, that there is no profit, that the financial contribution have been well deducted from the requested funding by public partners. Oops, sorry. Step 6, the IKAA threshold checked as well. So here we have 32%, so it is below 40%. That's fine. And that's it. So some reference documents for you to read. The model grant agreement with the Annex 5, which is specific to the GUs. The draft annotated model grant agreement, which I believe it's really useful because it's full of more concrete examples and annotations, and then the IKAA guidelines, and also all the other call launch documents have been published on IHI websites, so they are now available for all. Thank you.
Thank you very much, Gael. Take a drink of water. That was a long presentation, very in depth. I enjoyed it, and you know, it's good to be able to see how each part fits together so that people can make a proper proposal. So, if anybody has any questions now, we're going to go through them. So, you know, start typing. But we do have some questions already that I'm going to ask Gael, which is the first one is. Oh, well, actually, before I ask the question, I think it is important. Catherine put in the chat for you if anyone wasn't looking. These slides reference the model grant agreement, and these are the reference documents. You can go, there's the link there in the chat for you. And all the other documents will be on our website. So the questions, the first one is, can personnel time, the costs required to perform the activities by, for an example, an academic partner?
Where is it?
It's just right here.
This one out.
Yeah, so it's just, I'll just start here. Can personnel time and costs required to perform the activities by an academic partner be regarded as in-kind contribution to the project?
No, so in-kind contribution, it's only for private members and contributing partners. So I assume academic will not be private members or contributing partners. Well, at least the first condition is that they need to be either private member or contributing partners, and then they can contribute IKOP.
Thank you very much. How about, is data considered as in-kind costs? In the case, it would be provided by an industrial partner.
So to have costs eligible, the cost needs to be actual and incurred and recorded in the accounts. So the eligibility criteria are still valid. Are we talking about in-kind? Yeah. So the value of a data is not a cost, but the cost for generating data, that's a cost. So yeah, so costs are incurred for generating data. That's indeed a cost. So yeah, I hope it answers the question.
I think it does. Thank you very much.
Also, it can also be cost for harmonizing data or treating the data, you know, providing the data, but costs need to be incurred.
All right.
I think if I might just add something here if it's useful. This is Desmond here. Just the difficulty we've had traditionally with data in IMI projects is that usually data is not recorded, as Gail said, on the balance or the assets of the actual company. Therefore, it's not really locked down in the numbers. Therefore, it's hard to actually add a value to it. Obviously, if a value is, you know, if costs are incurred introducing that data into a project or something, then obviously it's an eligible cost, as Gail has suggested. So it's something that a number can actually be put to, and it will appear on the balance sheet. And then that's something that we can decide, is this an eligible or an ineligible cost. The problem comes primarily from these historical kinds of data where there really isn't any actual hard numbers attached to it. And that's where the problems originate.
Thank you very much, Desmond. I think that clarifies it very well. The next question is the Industry Responsible Office. How to contact them for the over 20% non-EU IKOP? where can we find the contact details? So it does depend on the industry, whether you're a member of FPA, you contact FPA, you're a member of COSIR, you contact COSIR, you're a member of Europa Bio, you contact Europa Bio. So that's sort of the quick way to answer. Is there anything to add on that?
No, exactly.
Okay, well that's clear enough. So yes, contact whoever it is that you are a member of. So I get the question about the slides and the recording. That's all going to be on our website. I did give a link for anybody that's taking a look, but you can of course just go to our website yourselves. So the next question, is it a disadvantage in the evaluation if private partners in a single stage proposal propose 60% or maybe even 100% IKAA and not the 40%? So which is foreseen on the program level. So is it a disadvantage in the evaluation?
Well, I'm not an evaluator, so I don't know. But what I can tell is that there is that threshold of IKAA, which is limited at 40% at program level, and it's not. It's okay if it goes beyond at project level. But as we said, you still need to make sure you contact the responsible office so they can monitor properly at program level. Then I would say as long as the 45% minimum contribution from the industry is reached, I'm not sure if it's a disadvantage. I maybe my colleagues can answer to this, but I would say as long as the 45% minimum industry contribution is reached, it is a valid proposal.
Gail, maybe I can contribute on this. Hello, this is Polyvios. The 45% is an eligibility criterion, so the proposals, as soon as they are submitted, we will go through the admissibility and eligibility phase. As soon as they have the 45% established in their budget table, they will move to the next step, which is the evaluations. However, the evaluators, the experts evaluators, they will assess how these actual contributions, not the money only, but the tasks are relevant for the project. For example, if a private member will include IKAA, and Gael already showed you the annex that should be attached to the proposal, for example, the experts, they will assess how if this IKAA activity is linked, how it's contribute to the project, what is the link with the objectives of the program, etc., etc. So it's not only about money. The money will talk at the eligibility phase. However, the content will be assessed in the evaluation phase. So key message here, eligibility, we cover the 45% minimum threshold, then we move to the evaluation, and in the evaluation, we will make the link, the experts evaluators will make the link between money and tasks and content. I hope it was clear.
Thank you very much, Polybius. And yes, it's great we have the scientific office. Everybody's here to help. If I should say that I'll take the moment that if you have any other questions, for instance, after the webinar, you can always send a message to the info desk. So that's infodesk@ihi.europa.eu. So the next question is concerning example 1. So although in example 1, it's a single stage proposal, large company Y has 50% of its cost reimbursed. Can you explain a little bit why?
Yes, because they're eligible for funding.
Yeah.
That's it. Well, clear enough. You ask a clear question, you get a clear answer. Here we go on to lots of compliments for Gayad. Very nice. Now, how about this one? Could you please confirm that seconded personnel free of charge is not an eligible cost?
I'm not sure of that one. Free of charge. Wait, let me think.
I have to admit, from the legal team side, I'm not, just the wording is a bit strange for me. This one might be better suited as an actual info desk question, and then the financial and the legal team can feed into the answer. And we might be able to ask for additional information just to make sure that we answer all the points.
Yeah.
So it's Portal Ranos? Yeah, I'd very much, I would request that the querist, the person who actually asked the question, if you contact the info desk using the address that Tom actually used and just send it through to us this afternoon, we can prepare an answer and we can ask for additional information if we need it, just to make sure we actually get it, get all the points.
Great.
Yeah, thank you, Desmond. Yeah, I would prefer answering this one in writing after checking one more time the regulation.
Yeah, perfect. I think we want to make sure that we get all the right answers and everything is clear to everyone. So the next question is, would dissemination, communications, publications be considered IKAA?
Yes, if they're not project costs, project tasks cost, I would say.
Yeah,
I'd
I'd add to this, this came up at a brokerage event as well. And I think it's important to remember that dissemination in particular is an obligation under the actual grant agreement, and it's everyone's responsibility for each person who actually generates results. So I think IKAA can be used to further dissemination, communication, and publications, but just from the legal team point of view, we would basically say that it won't necessarily replace IKOP that should be used for those tasks under the grant agreement. But I would agree with Gail that it could potentially be used in those areas.
Thank you very much, Desmond. Now we're going to a bit of a longer question. In fact, there's a couple questions in here. So there's an example. So consider that an SME, which is a member of an industry trade association, so therefore it's a private member. If that SME is in a third country, like Switzerland, the United Kingdom, then it is not eligible for funding because it's not a beneficiary. So number one, do contributions of that SME, if they qualify as IKOP, count as eligible cost, which are calculated against the 45% and trigger funding for other beneficiaries? I'll ask that one first. So do contributions of that SME, if they qualify as IKOP, count as eligible cost?
Yes, so indeed they qualify as IKOP, so they can count in the calculation of the minimum industry contribution of 45%, and the IKOP will be considered as non-EU IKOP. Well, as long as UK and Switzerland is not an associated country, well, formally approved by the time the grant agreement is signed.
Yeah, I would just supplement Gail's answer there. I agree completely, but I think there is a slight confusion in the question, which is at the moment, as far as IHI is concerned, we are regarding the UK as an associated country. So we're proceeding on the basis that the UK are associated and that the full association agreement will be signed by grant agreement signature. But obviously we're going to review that when it comes to grant agreement signature, and consortia with UK participants have to, take this into account, that we're regarding the UK as fully signed up, as fully associated. Therefore, their entities and SMEs are available for funding from IHI. But it could be the case that they're not if everything hasn't been finished on a political level when we get to grant agreement signature. That's different from Switzerland, where indeed Switzerland has indicated that it's not going to associate with Horizon Europe. Therefore, right from the very start, IHI is assuming that Switzerland are a third country and that their SMEs and beneficiaries are not going to be able to receive funding in IHI. That said, we understand that Switzerland in particular, beneficiaries coming from Switzerland who join IHI projects can get remuneration of their costs from the Swiss government. And we further understand that there's a similar mechanism, but we don't know how well developed it is or how finalized it is, that theoretically the UK should be able to receive remunerations for their project activities as well from the UK government. But we can't obviously confirm that.
Thank you very much, Desmond. We're going to continue on with this example. It's if third country authorities refund the SME for its contributions, does that in any way affect the budget calculations of the consortium?
I'll ask my colleagues to intervene if I'm saying wrong things, but I think that for IKOP, it doesn't impact. So if the SME is a private member and gets reimbursed by third country authorities, I don't think it will impact the fact that these costs are considered IKOP. It would be different if the SME was a beneficiary requesting funding, since then probably the financial contribution would then be, received by the authorities would need to be estimated in the column financial contribution received.
Excellent. Thank you very much. Anybody else have something to add?
Gael, maybe it's important to add here about the financial contributions. One of the novelty of the Horizon in Europe is not only that a member of a consortium proposal can give cash to another participant to perform certain tasks like we had in the past. For example, a large company X is giving 10,000 euro to a hospital Y to do certain tasks, and this was about to be cash. Now, with the Horizon Europe, we can have financial contribution outside of the consortium. Like the example we're giving now, this SME is receiving 10,000 euro to perform certain tasks. This one is a financial contribution. It should be included in the FC column of the budget table because it's outside resources available for the project, and this is a novelty.
Yep.
Thank you very much. Thanks, Polybius, for adding on to that. It's very clear. So next question is back to the hybrid model. So is it up to the private partners to decide how much funding they request? In the example you gave, it was 50%, but could it be more? Could it be less?
Yes, yes. Of course, it's not fixed. It's not that you're a hybrid participant that you have to request 50% of reimbursement of your costs. This is something that needs to be discussed. But as I said, you always need to, when you are a hybrid participant, you always need to think of the fact that the more you request funding, the less you have funding available for the other, public partners. And the more you request funding, the less you have contribution, basically. So you also need to keep in mind that you have to reach the 45% industry contribution as a minimum.
Thank you very much, Gael. We're actually going to go back to large company Y. So in example 1, it receives more than 50%, not just 50. Can you explain why?
Let me take this example again. So large company, they receive actually, in example 1, they're eligible for funding and they receive actually 100% of their costs. So they have, maybe I need to share my screen again. Let me share. How can I share? Can you share? Oh yeah, I will share my screen again maybe. 1 second. Share. Here we go. Here we go. Yeah. So you see the example 1 here. You're talking about large company Y. So they have 4 million eligible costs. 3 million are reimbursed by IHI, and 1 million is covered by financial contribution. So they get actually 100% of their eligible costs reimbursed.
Thank you, Gael. Okay. So thanks for sharing the screen too. I think that's clear for everyone to see. So the next question is all private, in particular the large companies, shall become contributing members? Does this count for the hybrid model as well? You know, there's a lot of questions here. How about the first one? All private, in particular large companies, shall become contributing members?
No, absolutely not. So contributing partners, it's only well, it's only if the company wants to contribute to the IHI objectives and contribute, you know, and without becoming a full member, basically. So no, it's not because you're a private company that you have to become a contributing partner, not at all. Because as a large company in stage one, in single stage, you are eligible for funding, so you can get your cost reimbursed, and actually you are not entitled to provide any IKOP or IKAA or financial contribution, since you are not a contributing partner and you are not a private member. So no, absolutely not. And does this count for those using the hybrid model as well? What does this count? Well, what does it mean?
Well, all private yeah, so the next part is that all private companies shall become contributing members. I think you're very clear on
Yeah.
that. Does this count for those using the hybrid model as well?
Does it mean, do you mean that for the hybrid model you need to have contributing partners? Is that what is meant? You don't have to have contributing partners in your project. You can have just private members, if that's the question.
I think maybe what we can do in relation to this is, I think I would very much agree with Gail's point, which is in that question they're talking about contributing members, and I think the language is getting a bit messy. So we have basically the private members that are, as Gail said, the industry and the companies that make up those industry groups, and then we have the contributing partners, and these are large companies or foundations or philanthropic organizations that have a particular interest in a particular topic, and they join on that basis. So they make an application to the governing board, and it's expected that they're actually going to contribute. So as Gail has said, if you're going to contribute to an actual topic, if it's an area of interest and you want to go down the route, then it's anticipated that you will primarily be contributing to the actual topic. You make your application to the governing board, and your application is accepted by the governing board, and then you're contributing. If you're a large company and you want to get involved in a single stage topic, then you can just participate in the consortium as a large company, and then you could potentially receive funding. I think that's the key difference. Contributing partners, I mean, it's theoretically possible that they could receive funding, but it's in the single stage anyway, but it's not really how it's anticipated that they're actually going to work. Because as I said, you're making this application to the governing board and you're saying, this is the topic of interest to us, this is who we are, this is actually what we're actually contribute to the topic. You lay it out in the letter, and the governing board then decide whether or not to accept that application. So it's a slightly different mechanism.
Okay, well, thank you very much. Yes, and you know, if anything is unclear, again, there's always the info desk for more in-depth answers if needed. So, next question is about attractivity for private partners. So, isn't it very attractive for private partners to put a high amount of IKAA to the projects to increase the funding or the funding rate for the private partners because they have less to contribute as IKOP?
Less IKOP, yes, but then more IKAA. Yeah, one or the other. I mean, they have advantages and disadvantages, I would say, depending on the rules and so on.
And this is the reason why we established a threshold of 40% in order to avoid a high level of IKAA that would replace the IKOP. And actually, these percentages were established in the Single Basic Act, in the regulation. So these are the targets for IHI program, and these thresholds should be maintained across the years. So I get the point from Jan. It's a very good point, but at the regulation level, at the SBA level, IKAA is equally important in terms of contribution, like IKOP. And in order to avoid all this imbalance, this is one of the reasons why the threshold is established. On program level, indeed.
Well, I mean, it's program level in the SBA. I think it's Article 119.
Exactly, on a program level. However, importantly, since we're talking about the members, private members, these members, through their associations, should work together in order to maintain the thresholds. So maybe we translate it at the project level somehow in order to ensure a balance from the beginning and not witness in the middle of the program imbalance among the different type of contribution, but this is the business of our private members through their associations in order to ensure that these thresholds are maintained through the years.
Thank you very much, Polybius. I'm going to go to Desmond on the next level, or the next question. Sorry. So, Desmond, in terms of intellectual property, can an industrial partner claim the exclusivity of the results generated by a project?
Well, okay. That's actually quite an interesting question. I can give the answer very bluntly with just a caveat, which is, strictly speaking, at the basic level, under the intellectual property rules in which we're operating, if a beneficiary generates a result, that result belongs to that beneficiary solely and completely. So you generate it, you make it, you own it. However, because you're getting involved in an IHI project, and because the whole concept of IHI is built around collaboration, you will automatically in the project, through the grant agreement which you have signed and through the consortium agreement which you also will have signed, have certain obligations to grant access rights to the result you've just generated to the other beneficiaries in the project. So if you generate a result during the project, you're granting an access right to the other beneficiaries who may need to use that result to get their own stuff done in the project. And you're also granting an access right to them, or a potential access right to them, to further exploit your results. But that's to be discussed between yourselves. So you own it, but you're also actually granting access rights. I'm also just going to mention here, because the word exclusivity is in there as well, and we've discussed this in the Rules and Procedures webinar and on the brokerage day and in a couple of other meetings. In terms of the exclusivity, you generate the results. If you wish to transfer that result or grant an exclusive license of that result outside the EU to a third party or to another party, then strictly speaking, the IHI joint undertaking has what's called a right to object. We can exercise a right to object to that transfer or exclusive licensing within 4 years of the end of the actual project. And if you intend to transfer or exclusively license outside the EU, you should notify the IHI JU office ahead of time, and we can take a look at it. But none of that invalidates the short answer, which is, if you make it, you own it, and then you have the asterisk with caveats.
Thank you very much, Desmond. I'm going to come back to something that Gael had mentioned with the IHI tool. It doesn't alert for errors. For example, it's possible to add requested EU contribution for participants not eligible for funding. So is there a budget Excel file available that can be used to set up the budget, and that also includes the different checking steps that you described in the examples?
Unfortunately not, but you can use the examples from this presentation, I would say, to start building your budget. I believe it covers all cases and all checks you need to do. Yeah.
All right. Thank you very much, Gael. We're coming close to the end of the webinar here, so I don't see any more questions. So I guess I'll take this opportunity to thank everyone. We've done a lot of webinars on the calls and the rules and procedures and now the financial procedures. So I feel like I've seen quite a few of you that have been in many of the webinars. So thank you for coming. I feel like we spent a lot of time together. Today, I'm going to obviously thank our comms team with Catherine here, our finance team, Gael, our presenter, of course, the legal team and the scientific team for answering all the questions. So if you have any more questions, send it to infodesk@ihi.europa.eu. All the reference documents, including the model grant agreement, are online. And I want you to keep your eyes peeled for the calls, which will be launched this week. So thank you very much, and I wish you all an excellent rest of the afternoon. Thank you.
Thank you.
Bye.